Hey everybody, welcome back to the Wealth Advisory's Top 10 Stocks. We're here, we're working on February 2025. January was a good month for this guy. Not quite so much for this guy though. All of Jason's stock picks were up. One of Jason's stock picks were up. So I really didn't see, a Chinese startup coming out of left field with like $6 million of funding upending AI. And like,
Caught
I
a
don't
lot
know.
of people off guard with that one.
Yeah, I think it did. I think there are a lot of people, myself included, that, kind of like question the veracity of the claims because, I'm not trying to throw shade on the whole country, but like Chinese companies do have a track record of making things up that aren't necessarily true and sound really, really good. Who knows? I've heard theories that like this is the way for China to throw cold water onto the American AI investment scene so that they can like have a little time to catch up. I don't know. I think it's a buying opportunity for U.S. stocks. I mean, stuff got crushed. NVIDIA went down like something like 25%, lost $589 billion of market cap in one day, which is the biggest single day loss for any company ever in history. It's also, this is really impressive, the founder of our company, Brian Hicks, he pointed this out the other day that when the Dow Jones crashed, I think it was the stock market, Black Monday, right? Black Monday when the Dow Jones crashed, the Dow Jones wiped $500 billion off of like the global stock market. So like, the crash that we call Black Monday was actually the entire crash smaller than NVIDIA's losses were in one day. That's crazy. I mean, that's impressive. Like that just tells you like how big the amount of money out there has grown, since then, since what's that, the 1980s. Anyway, I think it's a great opportunity to buy AI stocks in the U.S. I think American AI stocks are pretty good. I wonder if, the Chinese are maybe like not calculating their costs correctly, or maybe they're using more chips than they're admitting to, and they don't want to admit to it because there's like these chip bans and stuff. I don't know. But yeah, it was really interesting. It was a really interesting week this past week. Like a lot of my stocks were looking pretty good until that, and now they were looking really bad. Avago, Stereo Labs, like anything attached to AI just got pummeled. But again, great buying opportunity. I'm a buyer. I'm totally adding some of these AI names to my personal portfolio. I think everybody else should be too. We're long-term investors here. They're definitely going to be worth more later. I mean, people wanted to buy NVIDIA at $150. You should really want to buy NVIDIA at $125, so good week, good month for Jason, bad month for Jason, but we're both back, and hopefully I'll have a better month, and he'll have just as good of a month, and you guys will have a fantastic month because of that. So with all of that being said, let's go ahead and get to our picks so that we can get back to our days, and you can get back to your days, and everybody can hopefully have a great month. All right, so here we go. I'm going to start it off as I usually do. And before I do start it off, I just want to point out that we're going to run through our first 4 picks. We do 10 picks total, but then we're going to cut it off for those of you who are watching on YouTube. This is a service that we provide for our paid subscribers. So we don't think it'd be fair to give away something for free that they're paying to get access to. But we will put a link to a discounted membership in the description below the video. If you click on that, it'll take you to an order page. You can sign up, become a full member. You'll get the whole top 10. You'll get monthly issues. You'll get weekly updates. You'll get access to our VIP website. You'll be able to see our whole model portfolio, all the research reports we've ever written. It's a really great opportunity. I think it's a really good deal. Obviously, I'm a little bit biased, but we also have a very fair refund policy. So, there's really no risk if you want to check it out. We highly recommend it. If you don't, that's okay. We're going to keep posting these videos. We just ask that you subscribe to the channel, give us a thumbs up if you like the content, and hit the bell to make sure that you get notified of when we post more of it. And with that, let's go ahead and kick this off. And my first pick this month is, I told you it was a buying opportunity, guys. It's Digital Realty. Digital Realty, ticker symbol is DLR. These guys own data centers, and data centers are going to be very important for AI. I don't care what this Chinese company did. If they did what they say they did, that is huge for AI, it means that the market's just going to explode. It doesn't mean we're going to need less data centers. It means we're going to need more data centers. It doesn't mean we're going to need fewer computer chips. It means we're going to need more computer chips. So however this plays out, whether this Chinese company did what it said it did or not, we need more data centers. We need more places to store data. We need more things that transmit data. We need more power to get data around. So Digital Realty owns a ton of data centers in major metropolitan areas around the U.S. It's really, really sought after real estate. These big companies like Microsoft and Amazon and Google, they have their own data centers, but they're near their campuses. They're out in the middle of nowhere where real estate was cheap. They're not right next to New York, D.C., Atlanta, and that's where the people are, and that's where you need your data to be for this AI to really be effective. Because AI is not that impressive if you got to wait 5 minutes for it. I guess it's still impressive, but it's not as impressive. It should be instant. And that's what these data centers provide. It's a high-speed connection to the places where the people live, and you can put the data right next to them. I think Digital Realty is at a really great place to buy. It sold off really hard. Basically, like I said, everything attached to AI sold off. Digital Realty a little bit less than some of the other high-tech stocks because they're a dividend company, because they own real estate, because they're not, because they're what's the word I'm looking for? Picks and shovels. There we go. They're a pick and shovel type play. As AI grows, these guys are going to provide more and more and more storage space for the companies that are utilizing it. So DLR is my first pick for this month. I think that, hopefully we're going to have a recovery in the AI stuff by next month. So there we go. With that, let's pass this over.
Here we
to
go.
Last month's winner. Pay close attention, guys. All right? He's doing good.
Yeah, all right. Well, let's go ahead and get the next one up here. So this is one of the ones I had last week. As Dub said, it was a good month for old J Money over here.
It was.
And one of the reasons why was Sunoco, which we talked about. It's up 11% in the past month. Why is it up? Well, one of the first things Donald Trump did when he took office was declare a national energy emergency. What does that mean? It means the president could use the Defense Production Act to increase oil production. It also means that the administration could temporarily suspend environmental regulations. Pretty much any kind of executive action that they might want to take to increase oil production is going to be on the table here, and that's a huge priority for Donald Trump. We've known that about him. He loves the domestic energy. He loves to see it produced. He loves to see high numbers, record numbers of American energy production. He's going to want to, not just for lower gas prices, which obviously have a political tailwind there, but because he likes to export it. Donald Trump loves exporting American goods. It's one of his favorite things to do. And so oil and gas are a part of that. Now, what this is going to mean is, again, if we do get the higher production, lower oil prices, you might not like that necessarily if you're an oil producer, but if you're a midstream company like Sunoco, you love that because Sunoco has over 14,000 miles of transportation pipeline for oil and gas and over 100 terminals across the country for storage and access and stuff like that. So for them, it's all about this volume that's moving. And if energy and oil and gas is moving and being stored, it's big money for Sunoco. We're also talking about a company, we talked about it last week, that is expecting $1.925 billion. That's their projected annual revenue for this year. It's a 25% increase from last year. The reason it's so big, again, because they acquired New Star Energy last year. It's part of the reason they were able to build up their pipeline and storage network to the extent that they have, and that is going to be really showing up in their bottom line. And now, for investors, they also recently transitioned to the annual, or from annual to a quarterly distribution for the dividend payout. They also raised that payout by 1.25% to almost 89 cents. They're a shade below 89 cents per share, and they're targeting annual growth of 5% for that payout. So we're talking about a company that is really going to grow its top and bottom line over the next year, and it's going to give a lot of that value back to shareholders, an increasing amount of that value back to shareholders. And that's why we had Sunoco in to start. That's why it's off to a hot start this year, and I do expect that to continue here as we go into February.
Yeah, you got to love a company that increases their dividend and really, puts that into their business
plan. Yeah, really makes it a main focus.
Yeah,
absolutely.
I love that. Returning capital to shareholders is just the best thing a company can do. Love it. All right. So actually, along those lines, my next pick is SLB, formerly Schlumberger, or Schlumberger, if you like to say it the way I like to say it. Anyway, SLB is Oilfield Services, right? So this is similar. It's a similar idea, similar thesis to putting Sunoco in there, right? Sunoco's midstream, so lower oil prices mean people want more oil, so that means midstream companies are going to pump more stuff through their systems. Lower oil prices don't necessarily mean oil companies are going to be out looking for more oil, but an administration that is pushing oil companies to go out and look for more oil might actually mean that oil companies will go out and look for more oil. And that's where SLB excels, all right? They are one of the best at going out and helping companies operate in harsh environments. We're talking about offshore oil. We're talking about Alaskan oil. We're talking about oil out in the desert, in the mountains, in tough places. Basically anywhere that oil can be found, that it is difficult to get that oil out, you're going to find SLB there. They provide basically anything an oil company might need to get the oil out of the ground. They've got drills, they've got drill bits, they've got pipelines, they've got basically anything that you need. They can supply it so that you can get your oil rig or your oil well operating. So I think that SLB is going to do really well. Also, it just sold off. It was up about like 15 or 16% last month, but over the past week or so, it sold off a good like 5 or 6% because UK regulators are looking into its planned acquisition of Champion X, which is a similar company. They're also oilfield services, just smaller. Regulators like to step in and see. I mean, honestly, I think they're just mostly seeing if they can prove that they're earning their paycheck. So they're going to step in and they're going to look into this. The US DOJ already looked into the deal, said this is fine, this doesn't cause any monopolies, this isn't going to make like the market less competitive. If anything, it's going to make the market cheaper. So we're assuming the UK is going to figure out the same thing. The only thing that this regulatory push could do to sort of push back the merger is if the UK decides to do a second investigation, which potentially they could, but probably they won't. The DOJ didn't. Why would the UK's regulators do it? So we're taking a little swing on this one, but it's sold off some. It's been going up. Oilfield services should be in relatively high demand, and SLB is basically the best there is at that. So SLB, hopefully for the win this month. All right, next up, man with the plan. And another 3-letter name.
Yes.
I
try to really keep it simple for myself. Really.
Good, right? Another one we can just underline. I love it.
Yeah, it's RTX. This is another stock we had in the last top 10 that I retained because it's up 10% the past month. Why is it up 10%? First off, torched earnings. Fourth quarter earnings, $1.54 per share, topped the analyst estimate of $138. Sales, $21.5 billion, $1 billion more than what Wall Street expected. More impressive, the forecast. RTX is projecting sales of $83 to $84 billion this year. That would equate to a 4 to 6% revenue increase. That's pretty seismic for a company as big as RTX. To achieve that, they're going to lean on a backlog that is split between commercial and defense. Defense is now under the old Raytheon brand. If you remember, RTX is Raytheon. That's their defense unit now. The backlog is $218 billion right now. That's $125 billion commercial, aviation, and then $93 billion defense. So that's going to feed into their growth over the course of this year. They're expecting a lot of political tailwinds, and rightfully so. First off, Europe is raising defense spending, first to deal with the threat from Russia. They are in a completely different security environment now than they were just a few years ago since the invasion of Ukraine. And with Donald Trump coming in again, one of the hallmarks of his first administration was pushing our European allies to spend more on defense. Remember, browbeating NATO to make sure everybody is hitting that 2% of GDP target spend for defense. Most NATO countries have certainly hit that mark by this point, and now they're talking about increasing that from 2 to 3%, even as much as 5% is what Trump would actually really like to see defense spend. It's probably not going to get to that level, but it moved closer from 2% to 3%. again, you're talking about trillions of dollars in defense spending here. That's going to move the needle for a company like RTX, which makes a lot of munitions, a lot of weapons platforms, and they're going to do really well. Meanwhile, back here at home, we're going to get Donald Trump's defense budget in the next couple months. I expect that to be significantly higher than what we saw last year, in the last year of the Biden administration. And then we are also replenishing our stocks of munitions because we have spent so much, arming Ukraine and Israel over the past few years that we've really drawn down our stocks of missiles and bullets and mortars and shells and all these types of things. And they're going to have to backfill that. As we always talk about with Raytheon, they make a lot of, if you can name a missile, they make it. Stingers, they co-produce the Javelin with Lockheed Martin, Tomahawk missiles. All these things are made by Raytheon and RTX. So that's why their backlog is as high as it is. That's why they are seeing such strong growth going forward. And piling on top of all that, you have the resurgence in commercial aviation. That's doing quite well. And again, another really strong market these past few years. Just kind of a perfect storm of growth for them in terms of commercial aviation and defense teaming up to drive them. And that's why we've been on top of RTX. And I think you can expect that momentum to continue as we go into the spring here.
Lots of good reasons to be a buyer there. Tons of them. All right, guys, that's our first 4 picks. So we're going to go ahead and do a recap, and then we're going to wrap this up for those of you watching on YouTube before we get into the final 6 picks for our paid subscribers. So first up, my number 1 pick, or my number 10 pick, I guess, as it were. My number 5 pick. Gosh, sorry, guys. I'm having trouble with those numbers today. Again, pay attention to this guy. Anyway, Digital Realty Trust, ticker symbol DLR. What am I saying? Data centers, data centers, data centers, data centers. We need more space to put all of this data. If what the Chinese company DeepSeek accomplished is really true, then we're going to need like exponentially more data centers than we needed before when AI was expensive. Now that AI is cheap, like every Tom, Dick, and Harry is going to need his own data center, so data centers. All right.
What's that pick about again?
I think data centers.
Right.
All right, next
Yeah,
up.
Sunoco up 11% in the past month. Volume, oil and gas, it's going up, okay? And so when you're in the transportation and storage business and distribution the way Sunoco is, that's what you want to hear. Regardless of what oil prices do, gas prices do, it doesn't matter. They're moving the stuff. They're going to be moving it in increasing quantities here.
All right, next up, SLB, Schlumberger. Again, this is a play on push for American energy dominance and American energy independence, and this is an oil field services company. I think they're going to be in high demand if we've got administration pushing for drilling in or exploring in in places like offshore in ANWR up in Alaska. And also they just went through a little sell-off, so we've got a buying opportunity. All right, next up.
On RTX, yeah, another company that had a really good 2024, capped it off with a really strong fourth quarter, topping analyst estimates, and then you see that momentum carrying forward with a really nice, juicy forecast for 2025 here. So, again, a company that has benefited from a resurgence in commercial aviation, a lot of spend there, as well as defense spend, which also is going up, 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 up.
Yep, definitely, and up around the world too there. So there you have it, guys. There's our first 4 picks. Like I said, we're going to cut this off for those of you watching on YouTube. I think you've got some really good picks, though, and you got them for free. But if you'd like to pay just a little bit of money, you can get the other 6 picks plus a whole bunch of other things by becoming a full-fledged member of the Wealth Advisory. If you choose not to, we won't hold it against you. We'll keep posting these videos with the first 4 picks for as long as you want to watch them. We just ask that you give us a thumbs up, subscribe to the channel, hit that bell to make sure you're notified of when we put out new content, and drop a comment. We like to see what you have to say and hear what you have to think. Yeah. With that, we're going to let you go. So have a great month, and we'll see you next time.